What's up? What's up, everybody? Welcome. We have a great session planned for you today here with Mark Putrino, former hedge fund manager. A lot of you guys know him from the Benzinga Trading School. So a lot of you guys that are here, I can see are already members. I recognize some of you, actual students. So what's up, folks? Good to meet here after the sesh, the classes that you guys have. So yeah, we're going to start in 8 minutes with Mark Putrino. Like I said, a lot of you guys already know him from the trading school, but we're going to be talking about something different today. We're going to be talking about what's happening in the markets right now, this second. SPY is falling, Qs are falling, everything is falling. How can we trade and get around and navigate these markets? So Mark Putrino will be here with us, guys. Stick around, don't go anywhere, 7 minutes, and we'll get the thing started here. So stick around, folks. What's up, everybody? Welcome to today's session, folks. We have a special guest here for you, Mark Putrino, former hedge fund manager. My name is Rodrigo, guys. I'm going to be here with you today in this session, going over a couple things here with Mark, such as trading, what's going on in the markets, education, setups, trade ideas, all that stuff. So we're going to be here with you for some time, folks. In the chat, go ahead and let me know when you guys are ready to start. And we're going to go ahead and get this going. Shout out to the YouTube folks. Good to see you guys here. All right, let's get this thing set up, guys. And I believe we have Mark on the other line. Mark, can you hear me?
Yes, I can.
Hey, how you doing, Mark?
I'm doing pretty well, Rodrigo. How are you? How are you feeling?
Feeling better. But this market is making me just as sick.
Yeah.
These random spikes, I don't know, where it's like, who said what happened? And it's so much volatility, Mark, that really trying to do it on yourself is just, that's why the community is such a great thing here. But how was your day at the school, man? How were the classes there with the folks?
Well, it's going really well. And, part of that is the class, but also part of it is the market, right?
Mm-hmm.
And one of the things about the class, which is different than other classes, is there's 8 classes and we talk about the fundamentals and basic market principles. And then when we get to the 8th class, we start again. So it's not like just we have 8 classes and then we say, see you later. We have 8 classes and then they recycle and, the same students come. And here's the thing, right? The fundamentals don't change. There are certain fundamentals about the market that don't change. One of them is certain price levels are more important than others. One of them is trends. Things are always trending. One of them is momentum. So in the class, we spend like the first half an hour talking about fundamentals, and then we look into the actual market at what's going on, and we've been able to make some really good trades because, it sucks that the market's going lower, but as traders, we look for volatility, and there's been some pretty easy to read signs over the last few weeks. I know that kind of is probably contrary to what most people think based on what they're saying on the media, but we saw this coming as a class, and even if the stuff wasn't in there, Ukraine was going on, I would still be bearish, and I will explain why. And then one of the things we do is we talk about in the class, because students are like, hey man, there's inflation. What should I do? How can I protect myself? And in a situation like that, there are certain ETFs you can buy that are going to go up if inflation goes up. Some people say, hey, I think the market's going to go down, but I don't trade options. So what should I do? Well, there are inverse ETFs that go up if the market goes down. So the trading school covers, the various trading techniques and styles, and whether you're a day trader or a crypto trader or an options trader, long-term buy and hold, what we do is applicable to the markets. The fundamentals are the same, but the markets change. So I think it's a really cool class because I personally have never taken a trading class, formal trading class, but it seems like most of them are just like, all right, well, you watch a couple videos, a guy refers to some great call he made last year ago, you pay the money and you move on. But it's kind of a cool experience watching some of these students grow. And it's really cool hearing when someone says, not even if someone says, hey, I made money. Well, obviously we want people to make money, but it's, even from my point of view, almost even cooler or more gratifying to hear someone say, hey, I took a small stop out and I didn't get a massive blow up. I'm learning how to not let my psychology get the best of me. So I think things are working out pretty well. And I think it's cool. And I think that the people listening tonight, obviously we're going to talk more, but I think they could be, pretty happy if they give it a try.
Yeah,
so
absolutely.
A lot to cover.
Yeah, we have, for those of you that are not familiar, Mark Putrino, about 20 plus years, former hedge fund manager, trader under Steve Cohen, Mario Gabelli, Some of you guys might know him, those guys. But yeah, Mark Putrino, chief educator at the Benzinga Trading School. So thanks a lot here for your time, Mark. Let's go ahead and get this thing started. If you want to share the screen, but yeah, by the way, Mark has a really cool class called Investment Psychology. It's my favorite one. I really think you guys should check it out.
Okay, so do we see this chart of target up here, TGT? Okay, good. All right, well, I guess I'll just talk a little bit about my background and why I chose to take the position around the Benzinga Trading School. You know, I have a really good background for it. I have an extensive background in institutional trading. I was in business school in the mid 90s, and I met a guy by the name of Mario Gabelli, who some of you probably know. He's on TV all the time, one of the greatest money managers in not just our day, but in basically history. So he hired me, and I had the honor of working there for some time, where I was actually a market maker and I did all kinds of other trading. From there, I left to make a move over to work for Stevie Cohen, who now owns the Mets. Allegedly, the show Billions is based upon his life. So I spent some time there. And then from there, I went to 3 different hedge funds over a 15-year period as the head of trading. So there's really not too much when it comes to trading that I haven't seen. As the head trader, I've overseen strategies of everything from high frequency to index arbitrage to option trading, scalping, day trading. So I think I have a really good fit or a good background for the position. And at this point, I really like teaching. And I really like it when, like I said, people are gratified and they're not losing money, because so much of what you see out there is just bogus, right? And I mean, when I talk about like a potential trading school or a newsletter that I've like kind of looked into, it's on one end of it is just complete naivety, and people that have, like, for example, I was reading about someone last night who said, I've been trading for 3 years and I have this great track record. Well, guess what? Anyone who bought, 3 years ago has a great track record because the market is up higher. So there's a lot of inexperienced people that maybe they think they're doing a good job and they're trying it out, but they just don't have the experience. And then we go all the way to the other side, where there's things that are just like downright fraud and smoke and mirrors. Now, in the institutional trading world, when we're trading big, chunks of large stocks, we're not worried about these esoteric reading the tea leaf type things that some people think technical analysis and chart reading is. When we look at charts, we're looking at supply and demand dynamics of what is going on in the market. Let's see. Just wanted to point out this one stock. Anyway, it'll come back to me in a minute. But we're looking at supply and demand, and we're looking at human psychology, right? For example, certain price levels are more important than others. You could look at pretty much any chart and see that. And look at Target, who I just happen to have on the screen for whatever reason, but we can see that we have a really important level here. This was what we call a resistance level. At this level, there's a lot of sellers. And at resistance levels, there's enough shares for sale to satisfy all of this demand. At a place like this, buyers want to buy stock, but there's just not enough. So they have to pay higher and higher prices. When we get up to a resistance level, there's enough to fulfill all of the demand. So let's take a look at the opposite side of that, of support level. So I'm going to bring up the NASDAQ Qs here. All right. I'm going to show you a little something here that's kind of interesting. So now we have the opposite. We have a support level. This level here around 341 was support. And then when the market went below it, we had this big reversal and it became resistance. Now, this is something we see in markets, and this is where we can get some trading ideas from. Levels that had been support have a tendency to turn into resistance. And when I talked about market psychology, that's what we're talking about, because this comes from buyer's remorse. People bought here, and when the market went higher, they thought they did a good job, but it went lower. A lot of these people become remorseful and they say, I wish I made a mistake. I'd like to buy my stock back. I shouldn't have sold it. I was a fool, but I don't want to take a loss. So if it gets back up to the level that I bought it at, I'm going to try to sell it. So that's why we have a level that was support become resistance. But in terms of the market now, I'm going to bring up the S&P 500, and then I'm going to talk to you a little bit about inflation and what we could do to protect ourselves from it. So this particular level for the S&P 500, and this is the SPY, this is an ETF that tracks the S&P 500. We can kind of look at the S&P 500 as kind of like the mothership of the stock market. It's the index that contains pretty much all the stocks you ever heard of. So this is where we kind of start our analysis, because this here is the component of all its parts. And then after this, we start looking into the different parts. Like, for example, there's 11 sectors. So we can start to get insight by looking at these different sectors as to what's going to happen to get more insight. So right now, things are looking pretty weak, not surprisingly because of this whole Ukraine thing, but it's even more than that. If this was not happening in Ukraine, my opinion is the market would still be going down. So the biggest problem that we have is inflation. And if you guys just give me 5 minutes, I want to just run you through something that was really important that not only led to a really good and profitable trading idea for the class and the students, but also something that gives us insight into the broader picture of what's going on in the market. And as to why, personally, I think that inflation is a bigger problem than people think. So we talked about this a lot in the class, but I think it's really important. So I want to just cover it again. Now, back a few weeks ago, when big tech was reporting, all right, big tech was reporting, it's fine, whatever. It's cool. Some of the numbers were good. Some of them were not so good. But when we had the week, different companies report in different weeks, like different sectors, like the banks tend to report in a week, tech tends to report in a week. But when we started to get to the week where companies that were really affected by the supply chain, I thought it was a good time to take a look at some of these earnings. Now, generally, as technical traders, we don't really look at fundamentals, but sometimes we do, and we should, because technical trading ideas might come from understanding fundamental stuff. So here's what happened when we go back to Tyson. Now, this is on February 4th, right? The company reports its earnings. Well, actually, I'm sorry, it reported on February 7th. So that was a Monday morning. So on Friday, Tyson closed all the way down here around 88, right? Sorry about that. Just don't want to get a dry throat. So anyway, we had this big blast off on this huge beat. We had this big move higher, up 12% in one day. What happened? Well, companies have earnings estimates. Wall Street firms that follow them say, hey, we think they're going to earn this. We think they're going to earn that. The Wall Street firms that follow Tyson Foods say to themselves, or the consensus was, we think they're going to earn $1.95 in this quarter. The earnings came in at 287. That was a complete blowout, right? 92 cents above where the estimates are. So the numbers looked really good, and that's why the stock had this big move higher. But lo and behold, when we did a little bit more of a deep dive, and this is something we did as the class together, we looked at the company's earning presentation and so forth. We saw that, wait a second. The reason why the numbers are so strong is because Tyson had to raise their prices. of their chickens. Fine. Why did Tyson have to raise the prices of their chickens? Because of inflation, because of the cost of goods that they need in one quarter. All right. Probably the biggest cost is the grain they feed their chickens, was up 19%, or maybe it was 18%. Either way, that's astronomical. And the fact that Wall Street missed this is just yet another sign that Wall Street is out of touch. A current theme or a running theme in the class is that we point out when the media is wrong and mock them when appropriate. Just whatever, to give it a little bit of light humor. But students that are in this class for 6 months, 3 months, they're starting to learn that you don't need to listen to the quasi experts and the media or the para experts. We can get our own insight by looking at this stuff. So what happened? Numbers were really good, but on the surface, but if you dug a little deeper, they actually were not good. So this gave us the idea of, hey, here's a potential trading idea. This stock is really overextended. Wall Street really kind of doesn't understand the mistake it made yet. So we're going to expect a reversion, giving back these gains. These gains kind of shouldn't have happened. So we looked at the stock. This is more something for our shorter term traders. And we have a lot of options traders and shorter term traders. And we said, all right, well, going back to our original point that some price levels are more important than others, what price level would need to be crossed to give us a conviction that this reversal we expected is actually underway? And we keyed in on this price of 97.80. It was the closing price pretty much here and here. So the thought is, if this support at 97.80 breaks, that's going to be a good sign that this reversal we've been expecting has occurred. So people entered the trade here. And like I said, some of our options traders, doubled their money, tripled their money. Some people probably just traded the stock. Our target price was down here. And it got there. And it's since gone even lower. But why did we have a target price here at 94? Well, 94 is where the market peaked here. So we saw that buyer's remorse can lead to resistance because of remorseful buyers trying to place sell orders. Well, here we have remorseful sellers. People sold. They thought it was a good thing when it went down. But when the stock went higher, a lot of these sellers say to themselves, darn, I made a mistake. I shouldn't have sold it. I want to buy it back. So if we have enough people enough remorseful sellers placing buy orders at their selling price, a level that was resistance can turn into support. So that's why we decided to have our price target there. And sure enough, that's where we got. And now we've even kind of gone below that. But for a 2-day trade, it was a pretty, darn nice trade. So this tells me that inflation is worse than expected. Tyson said their cost of goods were up 19% in the quarter. Okay. This here is something that we look at. I can get rid of this because this is a little bit out of date here. This is a widely followed measure of inflation, the CRB index. It has a portfolio of, steel, oil, of course, wheat. I think there's maybe 28 different commodities in this thing. So it's a good gauge of inflation. As far as I know, it's probably the most widely followed one. So I'm going to mark out here the fourth quarter of last year, October, November, and December. All right. So the Tyson chicken numbers that we just went over, up 18%, were based on prices in this range when the CRB index was about 225, 230. Look what's happened. It's at 280. This index is up 20%. In this inflation, this index, this gauge of inflation is up 20% since the beginning of the year. All right. If you listen to the politicians or the Fed, they're going to say, well, inflation looks like it's about 10% a year. Don't believe them. incredibly wrong. These are the same people that said inflation was transitory last year. So we have this policy, or this monetary policy by the Fed, which frankly was a complete disaster because they overdid it, which is why we're facing inflation. The same people that were saying inflation was transitory a year ago now are completely underestimating it. And I mean, look at this, right? So we have this monetary policy. We also have another problem. The money that's coming out of the stock market needs to go somewhere. If you're some big shot fund manager and you're selling your stocks, what are you going to do with the money? You can put it in a money market, but there's no return. Even with interest rates higher, the yields are still bad. So what are they going to do? They are going to put things into the commodities market, and that is going to even exacerbate or increase the upward pressure on all this stuff we have. So in my opinion, inflation is way worse than you're hearing about it. And I think I've probably just showed you, proven it to you, because I don't know how you get 10% annually from something that's up 20% in 2 months, but that's why I'm a stock market guy and not a politician. So now the obvious question is, well, all right, Mark, I believe you. There's really big inflation. What do I do? What am I going to do? Well, fortunately, there are some things that you can do. There are certain things that go up along with inflation. Maybe technology stocks have been going down. Facebook has been getting crushed. But some things go up with inflation. One of the things I pretty much talk about every day recently, because of the inflation pressures, is this. And I know a lot of the students have bought it. It's an ETF. I'm not pitching it. I'm just saying it's a potential good idea for not something to really trade in and out of, but something to just have to kind of put away in your portfolio for the long run. Because as long as inflation keeps going up, this thing is going to keep going up. It's designed to follow a benchmark like we just looked at, a different index. But, basically for our intents and purposes, the same thing. And we could see here that in January, this thing came into the year right below 21, and now it's trading just below 25. So while equities have been blowing up, we've had these inflation-based things that have been soaring. So, when we go into the market and we want to trade, we can't guess. Well, we can, but we could also lose a lot of money. Or we could say, I learned this system in, some YouTube channel or some guru, seeker, super double probation trader or whatever, showed me. But the markets change and the markets evolve and the fundamentals stay the same, but the markets change and evolve. So that's what we are trying to do with it, Rodrigo. And I think a lot of people have been pretty happy with this.
So this is what this is a sneak peek basically of what happens in a class, right? In one of the sessions that you do the Monday to Friday here.
Yeah, absolutely.
Yeah, no, that's really helpful because like, for example, if you're trying to trade on your own, you're trying to do it by yourself, a lot of things happening in the market. At that point, you're just guessing. Really getting a mentor is I think is the best way to do things. Like if you're trying to, learn basketball, you get a coach. You're trying to play tennis, you get a tennis coach. I think this is great for all the new traders and even the experienced ones, because to be honest, I don't know anybody that besides yourself that is traded there with Mark Cohen or Steve Cohen or Jabelli at that caliber. So that's really good to have that, not just the education, but you have the trading experience too.
Yeah. And I think a big part of what we teach in the class, or the philosophy, so to speak, is that there's a lot of misinformation out there. And sometimes things aren't really as complicated as they seem, or as Wall Street wants you to believe. Like, Wall Street wants things to seem complicated so they can charge high fees for it. But it doesn't need to be. If you can understand the basics of supply and demand, you can understand how to be a technical trader. What we're doing is looking for things that are out of equilibrium. If you can understand this, right? If you're a homeowner or, thinking of buying a home or whatever, it's a common term where people say, oh, it's a buyer's market or it's a seller's market. What's the difference? Well, in a buyer's market, there's more more homes for sale than there are, buyers around. So the buyers can kind of pick and choose. The buyers can kind of go in there and negotiate and say, well, you're offering this. I'll tell you what, I'll pay you this. That's a buyer's market. There's more supply than demand. Seller's market is the opposite. There's more demand than supply. So if you're a seller, now you get to dictate the price. So in a real estate market, if it's a buyer's market, the sellers are going to go to the buyers and accept whatever price that they're willing to bid. And that's a bear market. In a seller's market, the buyers are going to go to the sellers and agree to pay their price. So if you can understand that, you can understand the stock market, because that's what we're looking at here. We're looking at supply and demand. That's what these charts are. And when there's not enough supply to satisfy all the demands, prices go up. When there's not enough demand to satisfy all the supply, prices go down. When we get to the levels where that changes, then we have trading opportunities, because that's kind of the name of the game, is to find the trends that are turning. So we see it, one of the main things is the level. So these are the classes, right? Level one or class one, we talk about the philosophy, the stuff I'm going over now. Doesn't need to be that complicated. Here's how we look into the market. A lot of people ask me, how do you find trading ideas? And we pretty much go through the market every day and find different things. That's levels. The third class is we talk about trends. Markets are always doing one of three things: going up, going down, or going sideways. There's trends within trends. Then we talk about momentum. That's the emphasis of the trend or the strength of the trend. Why do we care about that? Well, you might have heard the term overbought or oversold. When something gets to an extreme, like if people are really pounding down something, it gets oversold, or really driving it higher, it gets overbought. And why do we talk about that? Well, because those things tend to reverse. Then we talk about, we have a class on psychology. We talk about patterns. We talk about kind of a broader way to look at the market, which I can go through in a few minutes. And then we talk about how to build trading models and strategies. So yeah, Rodrigo, I think, why don't you give the students if you don't mind, a quick walk just through the format and so forth.
Yeah, I'm getting a lot of questions too, since you were already mentioning it. So what I'm showing you guys is the Benzinga Trading School. This is the video library. This is where I hang around pretty much during the weekend when I have some free time. And I go and I look at some of the videos. The classes are all recorded for me. Obviously, I'm busy here all day with you guys. But after work, I pop in there. I look at the sessions, the recordings, the Q&A sessions, office hours. You will also get help to use Benzinga Pro, because the trading school comes with Benzinga Pro. And this is the video library. If you go to the homepage, this is what you'll see, what you're looking at right now. You have a full schedule. So, Friday, you have the office hours. Monday, you have chart patterns. Tuesday, investment psychology, and so forth. You also have chats, the chat rooms. So here you'll have a chat room where the students will post trade ideas. You can see the notifications, how many people have posted, questions for Mark, trade ideas from Mark. so you can get his trade ideas as well, community support, all that stuff. And of course, it comes with Pro. There's a 7-day money back guarantee and a free laptop for anybody that joins today on this session. So I think that covers everything. It's a full-on education Monday to Friday, from 7 to 9, and then from 12 to 1, you'll be with Mark going over the markets, analyzing, things that are happening, going over the lessons. And it's pretty engaging back and forth. It's not pre-recorded like most places. This is live. It's the closest you will ever get to a one-on-one when it comes to trading education. I'll leave it there. Mark, do you want to add anything there before we do move on?
Yeah, I mean, I just think people should give it a try, right? I mean, if I'm confident that you'll like it, or not even that you like it, but it's like that you will benefit from it. And whether you're a real newbie or a real beginner, or whether you're someone who's really experienced, there's really no prerequisite. There's, two things I want to point out. One is that the prerequisite is, I just want people who want to learn. And I don't care if you've never traded stocks before, or if you've been doing it for years. We just want people who want to learn. If you want to just kind of check in and get the trade idea of the day and then kind of move on, then this class is not for you, because this isn't like a trade idea mill. When we talk about the trading school, there are different ways of trading. This is not the Benzinga daily trade idea of the day school. This is, how to view the markets and come up with different things. Because here's the thing. Some people, people have different personalities, and what works for someone might not work for someone else. And there might be someone out there that says, oh, pay X many thousands of dollars and you could watch me trade. Well, big deal, right? I mean, if you watch, Tom Brady play quarterback, doesn't mean you can play like him, so big deal. You want someone who's going to teach you how to do something that's fits your personality and your style, because some people really like the markets. They want to be in on them every day. They like to trade. They like to know it, the news. They like the excitement. And for some people, that's fine, and they can be very successful. Other people want to do more things like looking at the earnings statement, looking about products, maybe long-term buy and hold. If you develop a strategy that doesn't fit your personality, you're probably doomed to failure. You might have some short-term success. Well, going back to Tom Brady, right? Had he been a nose guard or a linebacker, his career wouldn't have been 20 years or 22 years or whatever it is. So I'm going to take the screen back here from you, Rodrigo.
Yep.
Okay, and we'll just talk about a couple more things here. So a lot of people ask, well, how do you get your trading ideas? All right, let's talk about one of the main ways we do. I mean, we just talked about the whole Tyson food thing. But we start off our analysis pretty much every day. And this is what we specifically cover in detail in class 7, market sentiment, broader market things. But just because of the way the market's been, I mean, we kind of go through this every day because the market changes every day. And, that's what we're looking for. So we start off with, like I said, the S&P 500, and we call this the mothership, so to speak, because it's the widest benchmark out there. It's the most widely followed thing on Wall Street. When you're an institutional fund manager, you get graded against what we call a benchmark. And the benchmark is a particular stock index. And if your returns are better than the index, you've done a good job. And if the returns are worse, then you've done a bad job. So the S&P 500 is probably the broadest benchmark. So this is where we start every morning to take a look at it. Now, what concerns me is that this important level around 431, which we can see was important support back here, and important support back here, is starting to give away. So now let's look at the parts that make this up. The S&P 500 consists of 11 different sectors. And by looking at the sectors, we can kind of get insight into what's going to happen here. And then to take it down to another level or another layer, we look at the stocks within the sectors that give us insight to what the sector is going to do. And that in turn can give us insight into what the broader market's going to do. So the biggest sector is technology. So that's where we're going to start. We look at these spiders. Spiders are ETFs. And the spider family, if you see something that starts with an X, it's in the spider family. Now, we're fortunate that these ETFs are here because it's hard to get hold of, say, the S&P 500 technology index, because that's something that they sell to people. And we don't really want to pay just to see what the index says. So we can look at this ETF, which is designed to follow it. So we can see that tech, could be starting a kind of a reversal here. These blue days are up days. On a blue rectangle, the closing price is higher than the opening price. So this is where we had that big reversal. Everyone kind of threw the baby out with the bathwater on the initial Ukraine panic. This ETF got all the way down here, moved higher, got back above this important level. But now, we're rolling over and we're showing some potential weakness here. It looks like this support is giving way. Support is a large group of buyers. There's been enough demand to absorb all of the supply. Now, what happens when we start trading below that? Well, it's a sign that those buyers are gone. They might have left the market. They might have canceled their orders. They might have finished their orders. Regardless, if they're gone, it sets the stage for the market to move lower. Just like in any market, I don't care if it's the stock market, the commodities market, whether you're buying flowers or shoes, when buyers leave the market, it sets the stage for the sellers to have to push the price lower if they want to get their orders executed. They have to be willing to accept a discount. And that's what causes downtrends. So we can see right here, it looks like we got some short-term support that looks like it might be, breaking. We have the communication services sector, and it's the other technology sector, we call it. It's kind of hanging out right on top of this support here. We could look at the healthcare sector, and it really didn't do much today, kind of a non-day. We could look at consumer discretionary, and this is probably one of the real keys to where the market is going to go over the next few days. Is probably going to come right out of this sector here, because consumer discretionary was kind of a drag on the market, right? And here we have an example where we have a clear level that was support, and it turned into resistance. Why does that happen? Human psychology, buyer's remorse. People bought here, people bought here, people bought here. When it went higher, if they sold, well, great. But if they held on to it, once it falls back below their level, they're looking at a loss. Now, people are reluctant to take losses. So what happens? Well, they say, if it gets back up to the same price I bought it at, I'm going to sell it. That way I can get out at break even. If there are enough of these remorseful buyers placing their sell orders at the same level they bought at, it can turn the level into resistance. So this kind of stalled out the market for a few days, and then it looked like we were getting ahead, but now today we look like we're going to be reversing here. So now we have something else here that's kind of teetering on it's almost like it's on a tightrope kind of a thing. We could look at the financial sector, which was pretty much where the weakness of the market came from today. Now look at this. All right. This is the financial sector below this important level that was support. Looked like it was going to break back higher, but now it's lower. So this is an important thing to look at tomorrow, right? If XLF starts to go lower, the financials could start to pull the whole market lower. So this is something we need to look at here. I think let me just show you guys oil, because I just want to kind of point something out here. I don't know if I alluded to it yet or not. But my thought was that if this whole thing in the Ukraine was contained to Ukraine, and say it was like allegedly Putin thought it was going to be in and out and, whatever, within a week it's going to be over. The market kind of looked like that too, right? For all the hoopla and all the noise about, oil markets are going crazy. Well, up until today, right, really kind of just traded sideways. I mean, the price on Friday was the same price as it was on February 4th. But here's the thing, right? Now that it's going on longer, the longer that things go on, the greater the odds are that something really bad goes down. And what do I mean by that? Well, a lot of times wars start, frankly, by accidents. Say they accidentally shoot down a passenger jet, or some rogue general actually shoots off a missile. So in my opinion, the market would still be going down regardless of what is going on over there, but that could exacerbate the speed, and it's clearly leading to inflationary pressures. And this move today is a little bit scary, because this kind of tells me, maybe stuff is going on over there that's worse than we know about yet. Because this is a really kind of an amazing move. And I mean, if you look back over I don't know, let's look back at oil for a year. It's like there's nothing even close to this move. And, here's another thing, is that when you get a huge spike up like this, these moves tend to come at the bottom, when markets are bottoming. For a big move like this to come at the top, it's a little concerning. It could be maybe an exhaustion thing, but I don't know. To me, it's concerning. This action is kind of telling me that things could get, things could escalate over there. So, all right. Well, now once again, Rodrigo, really, I have everyone scared.
No, but it's something that like a lot of people really don't know how to trade around these situations. A lot of people, if they're very young, they it's just the fact that you've traded, similar situations does bring a lot of experience, and that's really something you can't really buy. It's like you have to, live for that. So I'm just pretty grateful. I'm not a student, but I am a student of you as well. So, all this stuff helps a lot every day, and especially in these times, because there's a lot of headlines coming out and you really don't know which way to go or if to do anything at all. So I think this helps a lot.
Yeah. And I mean, unfortunately, I don't care, I don't care what business you're in, but unfortunately, experience only comes with time, and that's with age. But whatever, I like I like teaching people. But yeah, you got to the market, like I said, the principles stay the same, but the market kind of changes and it evolves. It's like Mark Twain said, history doesn't repeat, but it rhymes, right? So you see a lot of similarities of these things going on. So this is kind of, a little bit of a concern. And it's not just in oil. It's, in other things too. Like if we look over at wheat, for example, the Ukraine is the breadbasket of, Europe. And, let's I don't know how many people can remember this, but the last time there were grain shortages in the Middle East, what happened? It led to the Arab Spring, which was all kinds of riot and everything driven by, lack of food, right? Or, food riots, which is something fortunately we here don't have to worry about, at least not yet. But anyway, so here's wheat. This is going much higher. There are palladium. So now say you're not a options trader and you're like, what the hell am I supposed to do? Well, just like we talked about that there were ETFs that could help you fight inflation or hedge inflation, there are ETFs that go up when the market goes down. They're called inverse ETFs. So if you're not an options trader, you can look at these things because they trade just like regular stocks. And for trading them, for all intents and purposes of taxes, it's just like trading a regular stock. So one of these guys is this SH, right? Pro Share Short 500. So the way this thing is designed is that if the market goes down, it should go up roughly the same amount. So SH today trades inversely to the S&P 500. It was up about 1.6% today. So that tells us the S&P 500 was down about 1.6%. So of course, in the class this week, we're going to be following up with more of this stuff. There we go, down about 1.5%, because, we don't want bad markets. We don't want recessions. And frankly, I think at this point, a recession is almost guaranteed. But as individual people, what the hell can we do to, prevent that from happening? Nothing. But if we don't freak out and we think about it logically and we become aware of these potential ways that we can protect ourselves, then we can, at least take away a lot of the pain. This particular inverse ETF is very popular. It's called SQQQ. It's the Ultra Shares, or the Pro Shares Ultra Pro Short Qs. Try to say that fast. Pro Shares Ultra Pro Short. Pro Shares Ultra Pro Short. So this is designed to move 3 times inversely to the NASDAQ 100. The NASDAQ 100 consists of technology companies, so this is going to be more volatile than the S&P 500. But today, this thing was up 4.7%, which tells us that the Qs were probably down about whatever a third of this is here. So, whatever a third is. So now let's look at the Qs. So they were down 1.53%. So, we don't want down markets, but we can profit from them and we can hedge from them. And if this was 50, 60, 100 years ago, and you thought a bear market was coming, what could you do? I mean, there wasn't much you could do. You could sell and put your money in cash or in the bond market. But now we have these ETFs that trade inversely, and we have ETFs that track inflation. So one of the other things that we talk about in the school a lot is that if you're trading, you need to know what your toolbox is. You need to know what your set of tools is. Some students and some traders are successful. They have like a rifle approach. I mean, some people trade one thing. They might trade Qs. And then if they get a signal with a lot of conviction, they might go into the leveraged Qs, like the ones I just showed you. Some people have like a shotgun approach. They can just be open to trading anything. And again, there's no right or wrong way to do it. It's just a matter of what fits your personality. There's arguments on each side. If you pick 5 stocks and you just really follow them closely, you're going to really learn, how they trade. But that's going to maybe shut you off from opportunities. You could take the other side. Well, I'm going to be open up to just trading anything. It just depends where the opportunities present themselves on a given day. So, there's a lot that goes into trading, but then again, it's not as complicated as it sounds. It's like, here's what we're going to kind of look at. Here's where we're going to focus on the levels, the trends, the momentum. These are going to be my tools. And by having a short list of things you trade, it takes a lot of the guesswork out of it. It's almost like if you're a golfer and you have a choice of like, all right, well, I have 3 different ways I can hit the ball to the hole here with 3 different clubs. And if you're a golfer, that, like, well, right in your backswing, you start thinking, oh man, I'm using the wrong club, and that leads you to a bad shot. Well, if you only had 1 club, then you wouldn't have that thought. And it's kind of the same thing with trading, in that, if you start to master a narrow range, you can kind of get better at it. But there's no right or wrong. There's no right or wrong way to look at it. It's what's right for one person might not right be for other people. One of the kind of interesting things I saw today was this Lucid. And this kind of gives a good example of an important level. And today's class was levels. And there's a reason why I made it the second class. It really is kind of the first class, but the first class is in an introduction, but the second class is levels. Now look at this here. All right, so this is Lucid. We know the EV company. And this is a really good example of a clear resistance level. Remember, in the stock market, there are some price levels that are more important than others. For some reason, the 29 level became important on Lucid. Since the beginning of February, every time it got up there, the sellers took a stance and they offered the buyers all they needed, and the stock sold off. What happened yesterday? We got right back up to here. What was yesterday's high trade? 29.05. It's not a coincidence that it stopped there. It stopped there because it's a resistance level. For some reason, the 29 level is more important than, say, 28.70 or 29.10. The sellers had their orders at 29. And when we got there today or yesterday, it hit into it, and we had this big sell-off. And this happens a lot. Stocks that get to resistance, if they fail or can't get through it, they're followed by sell-offs. So, here's an interesting, well, I don't know, I guess you could say it's interesting, but it's just yet another example of how certain price levels are more important than others. One of our students, I don't think he's with us today, Maddie, pointed out this. Like, one of the things we do, Rodrigo, is what I do is we talk about, levels, and I ask the class, all right, well, let's see what you're looking at, and let's see if you see things that are important levels. So one of the students pointed this out today. All right, well, how about USA Truck? Here's an example where this level 23, I guess I could type that in there just to, whoops, just to make it easier to follow. For some reason on this stock, USA Truck, 23 is an important level. So when it got to there in November, it hit resistance and it ended up going down. Then it broke back through it. And now what do we have? We have this big sell-off. For whatever reason, I don't even know if this was earnings or whatever it was. But this is one of the reasons why it's important to know where these levels are, because it gives us insight into where to buy things and where to sell things. And that's ultimately what this is all about, right? You want to know where to buy, where to sell. If not, you wouldn't be here. You wouldn't be listening to me right now. So let's think about this. Stocks up here starts to crater, starts to fall. You say to yourself, I like USA Truck. It's not a bad company. I might want to hold it for a while. Or USA Truck has made this massive move down where it's dropped, 25% or whatever in a matter of days. I think there's a rebound. Where should I be looking for support? Well, as we know, levels that were resistance can become support. And that's what happened here. Now, obviously, it got a little below it, but this is not precise science. We talk, we're in ranges here. We don't try to get it to the penny because we don't want to miss a big move because we got too cute trying to get pennies. But sure enough, this sell-off happened. And if you were thinking, oh, gee, I want to buy USA Truck, well, there's a good chance there's going to be support at 23 because it was a resistance level. And sure enough, it became a support level. So this is something that one of the students pointed out. I don't know if they were long or got into it, but when I was in business school years ago, back when we used to use, back in the one-room schoolhouse where we, had our chalk and our blackboard. Just kidding, I'm not that old. But anyway, when I was in business school 20 some odd years ago at NYU, I took, I don't even know, right? 2 years for a master's, 5 classes a semester. I took 20 classes. I really only have vivid memories of 2 of them. Okay. One of them was my public speaking class because anyone should take classes on public speaking. Basically, the class is you get up in front of everyone else and you talk. People are afraid of speaking in public, so it's a good class to do. But the other class was taught by a guy by the name of Larry Zicklin, who was back in his day a legendary money manager. Now he was the head of Neuberger and Berman, which was a huge firm back then. And I guess now he's probably just a philanthropist, really, really, really good guy. But anyway, he was one of my professors for a class. Now, the reason why I point this out is because it's one of the only classes that I actually really remember well. And something that really had a profound effect on me. 25 years later, I still remember the class. Now, the class was ethics. It was, just on ethics. So this is what Larry would do. This was literally the class. He would come in. Back then, people still had newspapers. He'd put the Wall Street Journal down and be like, oh, let's look at this article. XYZ does this, blah, 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 blah. Let's talk about some ethical implications, some ethics things or whatever. All right, well, the chairman's secretary traded on inside information. Bad. Well, the secretary's child, administrative assistant's child was, starving to death and she needed the money. Good. The point is, there was no right or wrong answer. It was just this open dialogue and this trading of ideas. And that's what I want to happen a lot in the class because, I'm no perfect guru or sage. There's a lot of stuff I miss. There's stuff I'm wrong about. But like this example here, USA Truck, I'm not sure if any of the students actually got in on this bounce and made money, but this was something that came from one of the students. Like I never even would have looked at it. So I think that's a good thing. And I think, Rodrigo, that a lot of the students are
absolutely. And,
learning from that.
I mean, I've been learning from it all this time. And Douglas has a really good question. Do the classes start in November? No, it does say something on the checkout about November, but you don't have to worry about that. We did open the enrollment right now. So you guys can join. You can join the school right now. You don't have to wait until the next November, guys. So that's the special we got here for you today. But yeah, Mark, I mean, look, these markets, man, like you could be doing this for 100 years, man. Nobody can tell where these things are going right now because it's just so crazy. There's so many headlines. It's so many things happening at once. You have inflation, you have rates, you have a possible nuclear war, you have COVID, which might not even be a thing, but who knows, right? Some weird variant can pop up 2 months from now. So there's so many things happening, Mark. And before it was just COVID. 2020, it's just COVID, right? But now we have so many other things and they all seem to leverage and impact each other. That most traders really, from what I speak to traders, they really do appreciate the company being with you all day, where you can actually, break it down for them, because many folks really, they're new and they need help. Like, hey, what's happening? Why is this happening? That kind of stuff.
Yeah, and what we really need to do, especially in a time like this where there's all these crazy things going on, is kind of shut out the noise and just let the market tell us what to do. Because the market is never wrong. The gurus on TV or on this, social media, they're wrong a lot, but the market isn't. So that's why we need to watch this stuff. Like, let me go back to oil, because I know that some of the students made some money on the short side of oil, not necessarily trading oil, but trading oil companies over the past month before today, because again, if you're just listening to the media, you would have thought oil was going crazy, and it was volatile, but for a month it didn't even move. It didn't even really move. And yet it's like, oil is high. I wish I made copies of this, and I think some of the students did, but it was like one of the greatest headlines I've seen in a long time, that just shows the stupidity, or sorry, I guess that's a little harsh, but shows the naivety or the lack of knowledge of the media. Okay, this day here, oil up on pressures on Ukraine tensions. Okay, fine. Oil up on Ukraine tensions. As traders, we know that's not true. It's really just up because it's found some support in 92, but fine. Let's just say they're right. The next day, oil falls down big. And guess what the headline is? Ukraine tensions put a price under the floor of oil. I mean, to me, that is just absolutely such a preposterous thing, where whoever wrote these headlines just doesn't know what to do, because they're journalists. They're not traders.
Right. They'll do that when, for example, like I remember in the COVID times, like stock market falls as investors worry about COVID. And then it goes up the next day, and it's like stock market rises as investors shake off. I
Yeah.
love that word, shake off, right? It's like, and people take it literally, it's like these people are just writing articles, it's um
I would say the vast majority of the time, and I'm talking 90-95%, when you hear some of these people in the media try to explain what is going on in the market, they're just wrong. They don't know what they're talking about. Here's the thing. The media is really, I guess, maybe at one point a long time ago, was meant to educate you, but now it's meant to entertain you. And the media tries to attach some kind of a fundamental story or reason for every little particular move that we have. And that's just not the way the market works. It's very, very rare for some fundamental story to actually affect the market. Interest rates, well, that's a big deal. That might affect the market. But every day you put it on, and even some commentators I like, they're probably cool people to hang out with, but it's like, it's like, Biden sneezed and the market went up 8 points, and then Jay Powell said this and the market went down 9 points. I will tell you this, Rodrigo, as someone who has worked at literally some of the top institutional trading desks that there are, no one is sitting around watching the headlines saying, oh, wait a second. Oh, wait Biden sneezed. Oh, let's sell. Oh, this guy said that, let's buy. It's most of the time, it's just random noise in the market. Now, of course, over the long run, if there's more demand, it'll drive the prices up or whatever. But the vast majority of the time when the market is moving, it's just random noise. But the vast majority of the time, the media always has to try to figure out why it's moving. Oh, the market's down 5 points on Ukraine tension. The Dow Jones is let me see what the Dow Jones is here in terms of just what price it's at. All right, so the Dow Jones Industrial Average is at 33,000. Okay, any move that's less than maybe 500 points is just random noise. It's not because of some fundamental thing that's going on, and that really, messes people up. Like, for example, my father is a perfect example. I hope he's not listening right now. I don't think he is. But my father's a really smart guy, but he doesn't know anything about the financial markets because that wasn't what he did. His background was actually in security and loss prevention. But he buys into all this hype, and he'll call me up and be like, "Oh, Mark, isn't the market down because of tensions in Russia, blah 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 blah." And I have to continuously educate him, but that's a different story. But just think about this, right? Just kind of let's clear our minds and think about this. Say there's some guy out there and his name is Joe, and he needs to withdraw money out of his account at TD Ameritrade because his son just got arrested and he needs bail money. So, all right, Joe calls up and is like, "Hey, I need $100,000, sell my stocks that are worth $100,000 and send me the money." Say at the exact time, some other guy, let's call her Susie, for her birthday gets $50,000, and she decides to put it into the same broker, like the same mutual fund, the TD Ameritrade. So as a trader, when you're trading, you can't just put stuff from one account into another. You actually have to go out into the market and make a trade. So now, for nothing that has to do with anything that's going on in Ukraine or anywhere else, or the Turkish lira, you have a investor calling up TD Ameritrade or whatever, this particular mutual fund, saying, "Sell, I need $100,000." So the traders are going to have to sell the stocks to raise $100,000. At the same time, these traders have orders to buy $50,000 worth of the same stocks from that other client. And this happens all the time in the institutional investment world. You have clients taking in money, you have clients taking out money. It just is how the world works. It's just how it is. So now if you're this trader and it's like, all right, well, I got this basket of stocks, I need to sell $100,000 worth. And I got this basket of stocks, I need to buy $50,000 worth. That's going to create noise in the market. In theory, you got more to sell, so it's going to push the market down a little bit. Now, would one of these people on MSN or on CNBC come out and be like, "Oh, the market's down because so and so needed to sell money to bail their kid out of jail," or is it going to be like, "Oh, well, market's down on increased tensions in the Ukraine"? So a big part of what we have to do for the more experienced people, Rodrigo, that aren't making money is, unteach them, or they have to unlearn things. And I think kind of you might be sitting out there thinking like, "Yeah, whatever, the mark, blah, 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 I don't believe you." Well, all right. If you're someone who, watches the media or listens to social media or this, whoever the guru of the week is, you would probably think that there's been chaos going on in the natural gas market. So let's kind of go back here to natural gas. Now, say you were stranded on a desert island and you, for some reason, didn't have access to the news, but you had access to charts. Would you think that there's chaos going on in the natural gas market? I don't know. If I go back to September, I mean, frankly, it looks like it's pretty calm. Wasn't like this, it wasn't this volatile, right? Where was the media talking about how volatile natural gas was here? No. Were they talking about natural gas breaking down here? No. Were they talking about this move? No. Or are they talking about this move? No. But now you can't put on some of the media with like, oh, natural gas markets are going crazy, up 4%, down 3%. But if you're a trader and you look at this, it's like, I mean, there's moves that maybe are tradable intraday, but there's really nothing decisive going on here. Meanwhile, one of the best trades we've had at the trading school, Rodrigo, where a lot of students were really, frankly, kicked some butt, was this move up here. Generally, oil or natural gas follows oil. It's not a perfect correlation, but oil had really ripped higher and natural gas had it. So we started looking at this as a trading idea. And this is, it's an idea that's over now, but a lot of the students, and if there's any of them right now out there, they could probably, they'll confirm it. But so we got this idea, right? All right, well, oil is really ripped higher, but natural gas hasn't. There's a chance natural gas could follow. What price level needs to be crossed that would give us more conviction that this move higher is actually going to happen? Well, there had been resistance around the 405 level. Then we think, well, if natural gas gets above 405, it could be a sign that the sellers who created the resistance are gone. They left the market, they canceled their orders, whatever. That sets the stage for a move higher. So in this situation, our entry was if we got a close above 405, and a lot of the students got in here, and this ended up being this massive move in a matter of a day where people really clocked in some profits. Now, someone might be saying, well, gee, Mark, that's great. I don't trade natural gas. What the hell am I supposed to do with that? Well, once again, we go back to the ETF world. There are ETFs that are designed to track natural gas. It's not perfect, but it's, for our intents and purposes, it's good enough. And the students use this ETF. Now, if we interpolate this back to natural gas, they were buying around 13 and they were selling around 16. But this is Rodrigo's in a matter of like one day.
Yeah. And Douglas asking, is there a session coming up that may be for folks who work during the day? Yeah, we have all the recordings there, Douglas. All the times that I posted the schedule on the chat. Also, shout out to Carrie here for joining. Welcome to the family, Carrie. Let's just briefly, like 2 seconds, quick schedule so we can get this question out of the way. Monday to Thursday, same schedule. From 7 a.m. to 7:45 Eastern, you have the lecture. From 7:45 to 9, you have the lesson Q&A and current market examples. And then from 12 to 1, you have a review and open market discussion with Mark. Today, I was able to attend the session at 12. And it's not only just the education, guys, like it's a back and forth thing. Someone will say, hey, what's happening with this ticker? And if there's time, and if time allows in the session, Mark can go over the ticker and, things like that if there's time. So it's more than just, hey, welcome to class. All right, class dismissed. It's more of like a personal kind of thing there too, I feel.
Well, it's a real school. It's like, it's a school.
It's just been a while since I've been to school. So, so it's like, whoa, we can still have this, but it's fun. Yeah.
Well, in this school, you actually learn stuff that counts, right? Like I said, when I went to business school, I took 20 classes and I remember like 2 of them. Could have had a lot to do with all the time I spent at the bar in Greenwich Village there, but whatever. That's a different discussion. But yeah, it's there's no such thing as like, the one hit wonder, right? It's like, I don't care, whatever you put it into, right? I mean, if you're a golfer, you don't go take 3 lessons and become, go on the PGA Tour. If you want to take guitar lessons, you don't just take a few lessons and start playing, like Jimi Hendrix or whatever. it takes time and it takes experience. But that being said, it's not as daunting as people think. I'm not here to, try to get people like, all right, hooked into like some product. Oh, I got to continuously buy. I'm here to teach people how to be independent and think on their own and realize that a lot of the garbage that they hear on the news or the media is just absolutely wrong. And it gives you more, more fallacy than you think. It's all right. Like, all right, let me speak an analogy, because I tend to do an analogies a lot. Now, all right, picture a Bruce Lee movie, Enter the Dragon, right? Bruce Lee, had all these great moves, and he could, whatever, kick people's asses, right? There was 50 guys against them. They had guns and Uzis, and yet somehow, just with his bare hands, he was able to like defeat them all. That's not the real world. The real world is, if you wanted to go to Bruce Lee's Kung Fu school, you don't learn how to do all that stuff on day one. It's like, it takes a long time. It takes discipline, it takes practice, and it takes going through different situations. When the market's going up, it's easy to make money. You just show up. When I used to work for Steve Cohen, it was in the internet bubble where things were really going up. And one of the things he used to say kind of every day was like, oh, all you got to do is show up, because the market was going up. But now the market's going down, so it's a whole different thing. And I don't want to say that it's not, easy. It's easy to be a genius when everything is going up. When things start going down, things start to change, right? And you could read all the books you want. And this is why I want to do this like real time. Let's look at the market. I mean, I could have written a book. I could have written a lot of books. I could just be like, oh, well, last April I said this happened, and sure enough, here it did. Here's the chart. Or back in, 2014, I said this, and here's the chart, and blah, blah, blah. And that's what a lot of these books are. But in hindsight, everyone's got 20/20 vision. Everyone's perfect. Now let's go back to the sports analogy, right? Let's just look at boxing, right? You could do all the push-ups you want. You can work out on the heavy bag. You could run until you get in the ring with someone else. You don't know what boxing is, right? And it's the same thing with these markets. We have to learn how the real life thing is not necessarily the textbook thing. So that's why we study our fundamentals, we study our levels, we study our momentum, we study how to identify trends, and then we apply them to the market. Like all right, let's go back down to our martial arts analogy. Say you studied under Bruce Lee and you're, a Jeet Kune Do master. Now, if you're walking down the street and a guy attacks you who's, I don't know, a pro wrestler, 400 pounds, 6'9", well, you might fight him with a certain style. And of course, if you're Bruce Lee, you're going to win. And then you walk down the street a little bit more, and now all of a sudden a different style guy jumps at you, who's a Brazilian jiu-jitsu guy, who's 180 and 6'3" and blah 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 blah. The point is the fundamentals of how you use the kung fu stay the same, but the opponents are going to kind of change as things go by. And it's like learning the kung fu or learning the principles or the fundamentals of the market are what are going to give you the tools to adapt to the changing things that are going on. If you just learn one particular trading system, like if this was like, oh, sign up for the Mark Putrino trading school world, right? Well, my trading might only work for one way. We want to be able to evolve and change with the times. The principles, the fundamentals don't change. There's always going to be as long as there are financial markets, there are price levels that are going to be more important than others, right? As long as there are markets, there are things that are going to get overbought and oversold. Like I just wanted to bring this up here because this is metals and mining, this ETF. So I just want to show you, right? We talked about negative things, bad things, bearish things in the market, but there's always something going up somewhere. Now let's look at this, right? We have a clear level principle. Certain price levels are more important than others. Again, this is the XME, the mining ETF. Principle, price levels. Certain price levels are more important than others. We could see one there. We could also see one down here. Fundamental, right? Some levels are more important than others. For whatever reason, I don't know why, 40.50 is support for XME and 47.50 has been resistance for XME. So principle, when things break out, there's a good chance they move higher. What is the principle? What is the fundamental? Well, there's a large group of sellers offering their shares around 47.50. When we get above that, it tells us that those sellers are gone. They've left the market. Maybe they finished their orders, maybe they canceled, but whatever. When sellers leave the market, when supply leaves the market, it sets the stage for a move higher. So right here, we see basic fundamentals of the market. Some price levels are more important than others. Another fundamental, when an important price level gets crossed, it shows us that the dynamics have changed. All of a sudden, the sellers kind of ran out of ammunition. They ran out of powder, so to speak. They didn't keep any of their powder dry. This sets the stage for a move higher. Now let's go to another fundamental. Stocks that are overbought or markets that are overbought tend to reverse. So just purely understanding fundamentals of the way the market works without knowing anything else, say you were in a silo somewhere and you couldn't look at the news. Well, here's a breakout. We buy breakouts because they tend to be bullish. They tell us that there are sellers out of the market. The supply is off the market. That means if there's demand, they're going to have to pay higher prices, demand being buyers. Sure enough, that's what happened. Now we get to another extreme, but it's focused on a fundamental. Things that get overbought or oversold tend to reverse. What is overbought? What is oversold? You probably hear those terms all the time. Every stock has a history or a personality. And within that personality or history is what we would call a typical or average trading range. If something gets to an extreme above that, we call it overbought. If something gets to an extreme below that, we call it oversold. Why do we care? Because things that are overbought and oversold tend to reverse. So we saw these fundamentals. Support level, some levels are more important than others. Resistance levels, some levels are more important than others. Breakout, bullish sign, things tend to go higher. Now, I'm going to put in here a momentum indicator, and our momentum class is class 4. So that will be the Thursday class. But one of the main things we look at is these Bollinger Bands. They're a very common indicator, very popular, and there's a good reason. They're very effective and they're very simple to understand. They're called Bollinger Bands because John Bollinger is a well-respected kind of guru of technical analysis, and he's the one. I don't know if he invented it, but he at least made them popular. So this red line here is 2 standard deviations above the 20-day moving average. If the stock exceeds this threshold, or the ETF, it shows up on the radar screen of a lot of these quantitative funds that are based on probability, because according to statistics, about 95% of data samples, or in this case trades, should be within 2 standard deviations of the mean. So if something gets outside of that, there's a good chance it reverses. So look what happened here. XME got above the Bollinger Band here and it reversed. It got above it here and it reversed. Here we got the double whammy, right? We're overbought and we get to resistance. So we've exceeded that threshold, and now we also got to resistance. Overbought markets that get to resistance tend to sell off. That's what happened here. Same thing here. We got to resistance and we exceeded that threshold of more than 2 standard deviations. Overbought markets that get to resistance tend to sell off. Now we broke out, and what has happened? Once again, we've exceeded that threshold. We're not close to resistance, but we're overextended. So there's a good chance the market reverses. Maybe not as much as these guys, when we got to support, but purely based just on fundamentals, technicals, trading, without knowing anything about what's going on in the world, without knowing anything about what this particular security is, we could just look at this and say, there's a good chance that this thing reverts or reverses. It got overdone. It got overcooked. The buyers got ahead of themselves. So now there's going to be traders looking to scalp some kind of short-term profits on the way back in here. So now there's a good chance that this reverses. I can't guarantee it, but I would not be surprised to see over the next few days XME come in a little bit here. So the fundamentals, the principles don't change. The market evolves, but the fundamentals and the principles don't change. The Benzinga Trading School is not here to teach you some secret trick or some secret thing I discovered on a vision quest, when I was on peyote in the mountains in Mexico. That's not the way the real trading world works. In the real trading world, in the institutional world, this is what we're doing. We're not looking at Elliott waves or Gann theory. We're looking at levels, trends, momentum, and I just showed you here. Overbought and at resistance. So we're talking about a trend. It was trending higher, overbought, the trend got ahead of itself, got above what would be its typical or usual range, and it got to resistance. And there we sold off. Not a secret, not some super, secret puzzle or quantum mechanics. A market was trending higher, it got overbought, it got to resistance. It sold off. Down here, let me put in the lower Bollinger Band while we're at it here to see if it got oversold on the downside. And my guess is that yes, it did. So now we have this same exact concept here, but we're on the other side of the market now. If something exceeds the Bollinger Bands to the downside, we expect a reversion higher. So what do we have here? Below the Bollinger Band, reversion. Below, reversion. Now we get to the double whammy like we had up here. Oversold and at support, we reverse. Oversold and at support, we reverse. Oversold and at support, we reverse. So Rodrigo, these principles is where traders can make money. What are our principles? Overbought markets that reach resistance tend to sell off. Oversold markets that reach support tend to rebound. And we see this right here. And if you were trading XME since May, you would just be minting money. I know hindsight's 2020, but I think this is just a good example.
Yeah, and this is really just a little brush because you do take a deeper dive on all these lessons. So yeah, this is definitely valuable. I can tell you, even especially if you're new to trading and you're starting out, I know that we were looking at the QQQ chart earlier, Mark. Um, you did like a full analysis on that one too for the folks, right?
Yeah, I think so. And
Yeah,
we're gonna look at it again.
and
Yeah, let's see if we got some questions, Rodrigo.
okay,
Right?
just got to give a shout out here to Douglas.
I never get sick of that sound.
All right, Douglas, you're in, brother. Welcome to the family, my friend. Um, so yeah,
Let me go. I'm gonna take about a 30-second break while I just go refill my water glass.
yeah, no worries.
So I'll be right back.
Okay. All right, folks. So in the meantime, here in the chat, if you do have any questions about the Benzinga Trading School, please make sure to post this because this is expiring in a few hours when it comes to the special we have today. Free laptop, Benzinga Pro, which is like $2,000 a year typically. You get it included in the trading school. You get Mark Putrino in the trading school, more importantly. And you have the live sessions Monday to Friday. If you miss the sessions, Douglas, or anybody else, because you either have, 9 to 5, you're busy, it doesn't matter, whatever. You will have all the recordings. So all the recordings are available if you do want to watch them later. And that's something that I do pretty often. I do go after work and I try to watch a couple of videos there to just get up to speed with Mark. But the results that I've seen have been pretty impressive, especially for the people that at least attend 1 to 2 sessions a week. That's really where you start seeing the change. But of course, the best results are for the folks that are there literally every day because they get to learn from Mark live. They get to interact with Mark, ask questions. Hey, this is happening in the market. Can you take a look at it? So you're learning on the fly, on the spot, and many of the things that you will learn as well. We can't make a full chapter out of them, but they're very, very important to know when it comes to the nuances of the market, how it works, all that stuff. And just so you guys know, at the end here, I'm going to show you guys. Everybody that joins, by the way, gets a surprise gift. All right, just email me when you sign up. But once we're done here with the session, I'm going to show you guys Benzinga Pro, and I'm also going to show you there a couple of clips there from Mark because there's a great session today. But yeah, I think Mark is back. How are we doing, man?
I'm doing good. All right, Rodrigo. So let's I have a conference call with some of these commodity guys in a bit, but
we should
I think I
bring
got
him
about
on.
another half an hour or so.
Yeah, for sure.
Let's get some questions from people.
All right.
Just see what they think, and let's see if people can see, like, point out here's a resistance level, here's a support level, because that's
so like put a blank chart, don't put anything, and we're just going to ask the folks and you ask the question, where would you place it, and we'll see what the folks say.
Okay, here's what I'm going to do. I'm going to what am I going to do? I have a book. I'm going to pick it up and I'm going to put my finger down and point to a letter. The letter is B. Let's put up the chart of B, which is Barnes Group. All right, so we've looked at this one before. All right, so let's see what we see here. When it comes to levels, I see some right off the bat here.
Okay, so you want me to ask them what levels they see that are important?
Yeah, let me see. Where do we see resistance and where do we see support going back to, say, October here?
Okay, so we're going to do this little exercise, guys. Get your phone, whatever you have, pull up this chart, ticker symbol B. Okay, and all the way from November of last year till right now, let us know in the chat. Put support, 40, whatever, and resistance, whatever. And we're going to go over the answers here with Mark. It's a live surprise pop quiz. So we got everybody on surprise.
This is where you learn, man. I could sit up here and lecture until I'm blue in the face, right? But
yeah. And let's wait for the YouTube folks there because there's a little bit of delay. So yeah, guys, don't be shy. Feel free to participate, guys. That's the whole point of this. You have to participate. You have to know if you don't know, right? Otherwise, you don't know that you don't know.
Now, let's read. All right, so this is a chart of going back to September. Remember, a resistance level is a level where there's more shares for sell than there are to buy. So prices stop going up when they get to resistance. A support level is the opposite. There's more demand than supply. So stocks tend to stop going down when they reach the support. So here's the question. Where do you see a potential resistance level and where do you see a potential support level? And Rodrigo, you could get in on the fun here too if you want, but let's leave it to the
let's let the folks here talk about it for sure. Let's see. We have Jonathan Uriarte says 48 resistance and 43.7 support.
Yes. Very good. That's what I was looking at. 48, we have resistance, right? Right up around here. Every time the stock got up here, there was enough sellers to put a top on it. Support.
Yeah, and if for any reason you that was a little bit of you had some difficulties with that question, it's okay. It's fine. That's why we're here. That's why we have the Benzinga Trading School.
But that was a really good example of identifying clear resistance around 48. And remember, it's never going to be to the exact penny. Sometimes people say, oh, it's at 48.04, 48.12. It's in a range. We're talking about a $48 stock. We don't want to miss something for 10 cents or whatever. But anyway, yes, good eye. We have something else here too now. Here's where we could get a potential trading idea. All right, just by looking at this random stock. So let me just elaborate on this a little bit more. But that person who answered was, got it right. So this particular level around 43.70 was support. Why was it support? It was support because it was resistance. Resistance levels can turn into support. We have people that sold, and when the price went higher, they regretted selling. So they say they're going to buy it back. If there's enough of these buy orders coming from these remorseful sellers, the level turns into support. And that's what we have here. So that's a good eye. Now, how can we turn that into a potential trade where we could actually put some money in our pocket? No one's going to pay us to sit here and look at levels. People are going to pay us. Well, not people, but the market's going to pay us if we get some of this stuff right. Now, let's remember what we just talked about. Oversold markets that get to support tend to bounce. We have a market that had a massive move lower today. I don't know. I think it might have been on their earnings. Not quite sure. But massive move lower. And it didn't stop at 43.70 or 43.77 to be precise. Whoops, sorry about that. Just randomly, there was a reason why it stopped at here and not at 44.05 or 43.68. This is an important level. It was support before. So now let's go to our Bollinger Bands, the same indicator that we looked at. And I would imagine if we look at this, you're going to see that we are oversold. Remember, when we talk about these Bollinger Bands, they're based on statistics. Statistics or probability theory suggests that 95% of all trading should be within 2 standard deviations of the mean. If we exceed that threshold, that's going to draw buyers into the market, or in this case, if it's on the low side, it's going to draw buyers into the market. If it exceeds it to the high side, it's going to draw sellers into the market. They're going to be expecting a reversion to the mean. These type of traders don't care about what company it is. They don't care what the company does, what sector it does. They're just looking at this stuff. All right, so what do we have? A stock that's really oversold and it's reached a support level. Oversold stocks that reach support tend to rally. So think about what we just did here, Rodrigo, right? And this is kind of a big thing about the class. We just picked a random stock out of the blue. We identified important price levels. We also identified that the stock is currently oversold. So this is a potential trading idea. We have an oversold stock at support. There's a good chance that it bounces. In order to actually enter the trade, we might want to wait for the reversal. But this is what I mean when I talk about how it's common sense and we don't have like these super secret methods or, something that I think a lot of people that are not in the market or are new to it or whatever. And I think that this is a good analogy. And I bring it up a lot because I think it's really a good analogy. And I think it's what a lot of people miss. A lot of people think that the stock market or being successful at the stock market is like you're good at chess. Okay. It's like chess, you got to plan ahead. And, if you're like some master, you can think all these moves ahead. But here's the thing. The rules never change in chess. Whether you're playing today, tomorrow, 3 weeks, the king can only move one way. The queen can only move one way. The knight can only move one way. That's math, right? It's precise. That's not the way the stock market works. The stock market is not mathematical. If it was, it would have been figured out years ago by some AI fund. And these AI funds that were so hot 4 years ago, now their performance is just abysmal. So they can't figure it out. And here's why. They are going under the assumption that it's chess. It's not chess, it's poker. And when I say it's poker, I don't mean to diminish poker saying, oh, we're just gambling or we're guessing. Poker is a skill. I don't play poker myself, and I'd probably be pretty bad at it, frankly, because I have a hard time containing my emotions. But if you're a great poker player, the rules change every day because your opponent changes every day. They might be in a different mood. Your opponent is a human being. Maybe one day they're in a good mood. Maybe one day they're in a bad mood. That's going to change what they do. So what works in poker on one day might not work the other day. On chess, the same things are always going to work because we're in the pure mathematical world. There's no subjectivity. Okay. The stock market is not like that. This is an aggregate of humans making decisions, and humans are susceptible to emotions. So what works today may not work tomorrow because maybe someone was in a good mood one day and the next day they're in a bad mood. So it changes their thought process. So that's why when we look at the stock market, a lot of people spend literally years, and I was one of them a long time ago, just driving yourself crazy, trying to figure out this like mathematical formula that always works. And you're just not going to do it because it just doesn't exist. Now, if you understand that, I think that's a big part of the way to get success, because you have to realize that we can have these rules and we can have these parameters, but it's an ongoing thing that has to evolve and change. But again, the principles are always the same, the levels. But just picking a random stock here, we found a potential trading idea. So now I'm kind of into this. I'm going to take my finger again and put it back down on this book, and let's see what we find here. Okay, S, the next symbol we're going to look at. What is S? Centennial 1. Okay, so this is S. Again, another stock I just randomly picked. And if you guys don't believe I'm randomly picking them, you can throw some at me too, like I'm like a magician, right? All right, now what do we see here? Centennial 1. Well, first thing that sticks out to me is our principle of certain price levels are more important than others. 52 was resistance back in, this must have just IPO'd back in July, but resistance turned into support. Remember, there were people who sold. When it went lower, they thought they did a good job. When it went higher, they regret their decision. A lot of these investors say to themselves, man, I made a mistake. If this thing falls back to where I sold it, I'm going to buy it back. But I don't want to pay more for it than I sold it at. So I'm going to place my buy order at the same price I sold it. So here we have an example of a level that was resistance turning into support. Now, clearly 52 is an important level for the stock, right? It was resistance, it became support. Now we have the next thing. Here we had seller's remorse turning a resistance level into support because we have remorseful sellers trying to buy things back at the same price they sold at. Now, what do we have here? People bought here. Stock went higher. They thought they did a great job. Had they not sold and it went lower, now a lot of these investors, buyers, are remorseful. They say, I made a mistake. I want to get out, but I don't want to take a loss. So if it gets back up to the price that I bought at, I'm going to try to sell my shares at the same price I bought at. As a result, we have remorseful buyers placing sell orders at a level that was support. So now the level becomes resistance. So we could see right here, one important level. Okay, some levels are more important than others. That in and of itself, if you never hear my voice again or join the Benzinga trading school, that in and of itself is going to give you an edge against the vast majority of other traders. But when you start learning about how resistance can become support and support can become resistance, now you're going to the next level of understanding. So again, just another random stock I just pulled out of randomness gives a lesson on the importance of how some levels are more important than others. All right, so Rodrigo, let's hear one from the crowd here.
All right, folks, you heard it. Go ahead and put a ticker there in the chat. No spamming, just one ticker symbol. We just need one. Do you want a one-letter symbol, Mark, or?
Dude, 1 letter, 2 letters, 3 levels, whatever 3 letters, whatever you guys want.
All right.
But I can't see it, so you got to tell me what it is.
Okay. I'm just seeing them come in there. I'm gonna pick a nice one. Hold up.
It's got to be a legitimate stock though, with a trading history.
A legit stock. So no new stocks like new IPOs or SPACs.
Yeah, something that's been trading for
a while.
I don't know, 6 months or 8 months.
Cool. I got the perfect one. Sim has PayPal.
PayPal?
Yes.
Okay. All right. So PayPal is a stock that has been in trouble, obviously. Now, once again, we can see, all right, so now let's just kind of look at this through this lens of, just education, right? So, important level. I know this is kind of in the past, especially if you still own it and you wish you sold it, but what do we have here? 305, important resistance. So, if you bought it back here in May and it trended higher and you were thinking about where to sell it, well, there's a good chance it would have hit resistance right here. So we have a clear level there that was important. So now let's kind of move into the present and see what else we can see here. All right, so we have another important level here around 140. All right, so it was support here. Now this is May 20, so we're almost 2 years ago. And then we have this big gap here. And then, where does it open? Around the 140 level. Now this isn't an example of, well, it could be an example, but it's not as clear of an example of remorseful sellers, but it's an example that again shows you that we have some price levels that are more important than others, right? So we gapped up here and 140 became support. We gapped down here and 140 became resistance. So yeah, I guess it is the same principle, right? We have people that bought here that watched this thing go way higher and they thought that they had done a great job. But then we have this news and the stock falls out of bed here. And when it makes a little bit of a rebound, where does it hit resistance? The same level that was support almost 2 years ago, because there are still people that have held on to it that are telling themselves, man, if I could get out of this thing for break even, I'm going to do it. Now we move up here to February, and guess what? It's resistance. It's the top of where it was. Support becomes resistance. So we can see that in PayPal. In terms of what to do, I mean, I don't really see a great idea here to tell you. I mean, to me, it kind of looks a little bit neutral right now. But I will say this, based on the fact that certain price levels are more important than others, if PayPal was to rally, I think there's a good chance it's going to run into resistance around 140 again. You might have heard the expression markets have memories. This is what people are talking about when we talk about how markets have memories. The certain price levels can retain their importance for a long time. I just want to show you guys this here on CVS. Just in terms of, we're talking about price levels that can be important for a really long time, longer than most people would even think. But anyway, so CVS, right? August and July of 15 hits resistance. Now we're, 7 years into the future or 6.5 years into the future. Company has great earnings. Where does it hit resistance? The same level as from back there. And we could also look on the on the support side here. 52.30. Support. You can see this a lot actually on Intel is another stock with, well-defined longer term levels here. All right, so here's Intel, INTC. And I mean, this must have been in one of my presentations at some point, which is why it's here, but overbought and at resistance. And what happened? It sold off. Resistance at 68, resistance down here, support around 45, found support around the same level. This stuff is actually pretty extraordinary. People take it for granted, but if you're an academic, like I said, when I was at NYU, we learn all this stuff about random walk and efficient market theory, and it's just not true. People can outperform the market. Don't listen to this like, oh, you can't outperform the market. You can't outtime the market. There are people that outtime the market. Trust me.
I guess
And
that you could,
well.
you could, but you definitely need like a solid background education.
Yeah, you're not going to do it if you're just guessing.
Yeah. Yeah, for sure.
But if you apply this common sense and basic logic to it, then there's a good chance that you can.
Right. And that's really what, I mean, when you start trading, there's really no like, hey, before you, go into the markets with $100,000, $200,000, $300,000, like read this, maybe this will help you. Right. But brokerages are just going to let you in, right? It doesn't matter. They don't care if you lose money or make money. They still make money. But
yeah, really, as long as you're trading, they're making money. They don't care if you win or lose.
Right. And that's really the difference here, that we're focused on the education, and really that's where the edge is, because if somebody's able to understand the concept, who knows what they're capable of, right? Once they get the basics.
Yeah, it's just, it's not as complicated as most people think. I mean, even outside of like Rodrigo, outside of like the students, if I'm playing golf or whatever, I tell people I'm in the, stock market, or if I'm at a party, there's just so many myths and so many misconceptions about what goes on there. And it's really just not as hard as people think. It's just understanding supply and demand. It's understanding human emotions. I mean, think about humans, right? We're irrational, especially when it comes to money. If humans were rational when it came to money, there wouldn't be lotteries, right? Because rationally, you're not going to win the lottery. But for some reason, when it comes to money, people get irrational. Someone might spend 3 weeks figuring out the best price to buy a new dishwasher for. Well, if I buy it at Home Depot, it's this. If I buy it at Lowe's, it's that. Maybe I wait for a sale. But that same person might see an idea in a chat room like, oh, you should buy XYZ. And they'll throw 20 grand at it without even thinking about it, or 5 grand or 10 grand. So when it comes to money, people are irrational. But that's okay, because now that we understand that, or now that we have students understanding it, we can use logic and common sense to trade the other side of that irrationality and make money off of it. Like if something gets oversold, like here, I don't know what was going on back here with Intel, but people got irrational and they oversold it. It got more than 2 standard deviations below the 20-day average. It got to an extreme. Traders irrationally sold this. They threw the baby out with the bathwater. Think about this, right? If you knew on this particular day that a week later Intel would have been higher, you wouldn't have sold it, right? Just common sense. So this selling, whatever it was overdone. The market had an overreaction. People panicked. People were emotional. The rational trader that uses logic, like our Benzinga Trading School students, or at least that's where we're trying to get them, would step back and say, wait a second, this thing is more than 2 standard deviations below its average. It's overextended. It's got to a level that had been supported in the past, like back here. So, forget the emotions, forget what was driving this story. Who knows even what it was? This is, a long time ago. Actually, this is actually the COVID crash, believe it or not. But the market got oversold. It found a level that was support before, and it rebounded. Markets that are oversold that get to support tend to rebound. Markets that are overbought that get to resistance tend to sell off. So, and now what do we have here? Maybe potentially we have stumbled upon another trade, because Intel is trading very close to support. It's oversold. I would caution on this, though, everybody. I'm not saying that this is a trade right now, because if the stuff we were talking about happens and the market keeps going lower, then there's a good chance that Intel breaks this and moves lower as well. But I just wanted to, demonstrate that it doesn't need to be as complicated as people think. We're not reinventing the wheel. We're not building a better mousetrap. We're just trying to understand that the market is based on supply and demand. And when things are in equilibrium, they don't move. They bore us. When things are out of equilibrium, they move. And that's our chance to make money. So we look for stuff that's overbought, oversold. And if it just so happens it's at a support level, then that's even twice the fun, I guess, or twice the whammy.
Yeah, and that one is. I know that you and I went over Intel before. We've gone over a lot of stocks, but you literally go through a lot of stocks in the school. All right, all right. So yeah, we have. Do we have another ticker here, Mark? Or
yeah, well, I do. I got to start getting ready for this call, Rodrigo, and I know you're going to hang out to answer questions. But yeah, I mean, I'm in a groove, man. Let's get a couple more. Let's get a couple more going here.
Let's go with F Ford.
Now, Ford is pretty interesting, and this is yet another example where we see our fundamentals at play. All right, a second here. All right, so this is Ford. All right. Ford was in this range. It had this big move higher. And now we've had a big move lower. So let's think about our fundamentals. Let's think about levels, trends, and momentum. So important level, right around 1920, right? Actually, let's just make it 19 just to make it a clear level. So Ford has a clear support level around 19. Whenever it got here, there was enough buyers to, prop it up, fight back the sellers. Ford makes this big move higher, sells off. Where does it find support? Right around 19, right? Not surprising. Now, here's the problem with Ford. It broke below this level. And then what happened? The level kind of converted into resistance. Now, it's not exact because like I said, we can't get too precise. But if we look at like the low intraday trades, like here, the level that was support turned into resistance. People bought here when the stock went higher. They were really happy. But then it falls through their level. And now all of a sudden we have this large group of investors that bought that now are experiencing buyer's remorse. So they want to get out, but they don't want to lose money. So they place their sell orders at the same price they bought at. A level that was support converted into resistance. Basic principle of markets. Now, it's not, completely exact because we're not doing surgery here and we're not playing chess, like I said. And we have to remember that, we're talking about matters of pennies here. So I'm going to put this level right here, say 1880. All right. So it was support around 19 and then, fell through and now it's resistance around whatever, 1860. But it's the same concept, right? People that bought here are now trying to sell. A level that was support became resistance. So we could pretty much look at any chart and find some kind of thing that illustrates principles of the way markets move. And, we're not, charts have to be, if charts are viewed in the right context, they're not that hard to understand. If we think about support and resistance, what levels are important, what levels aren't. Now, Ford is trading in the aftermarket at 1670. Why? Well, let's go way back here to May. Where was the peak trade? Where was the high? Pretty much right where we are now. Resistance became support. Resistance here, resistance here. Resistance has become support. So here on the chart of Ford, support becomes resistance, resistance becomes support. I know this may be a little fast for a lot of people, but it's not as complicated as it sounds. And I know I see Rodrigo with a lot of the students that are in the class for a month or two. They're starting to be able to look at the charts and they're actually starting to be like, oh, hey, Mark, look at this support level. Look at that resistance level. Once you know where these levels are, I don't want to say it becomes easy, but once you know where these levels are, it's much easier than guessing to design some type of idea that could be profitable. If something's oversold and it gets to support, we start thinking about buying. If something is overbought and gets resistance, we start thinking about selling. It's not a perfect way to do it, but it's much better than just randomly guessing. And my guess is that a lot of people who are listening to us right now, Rodrigo, are listening to us because they guessed and they lost money. So we want to take guessing out of the equation. We're never going to be perfect, but we want to learn how to stack the odds in our favor.
Yeah, that definitely makes sense. Great words there, Mark. Well, I know you have this, your meeting there, but do you have any, closing remarks there on your end on the school what you'll be looking at next week with the markets, and why the folks here should give the school a shot.
Well, I think the main reason is because right now we're at a really critical juncture in the markets. We're we're seeing inflation. We're seeing this stuff in the Ukraine. Now is a great time to join because there's so much going on. If this was, I don't know, maybe August, things were much more chill. But now there's so much going on that now is a really good time to get in, because I think what happens over the next week or two could really set the tone as to what happens over the next few months or maybe even years. So, sometimes the market is just kind of meandering along and not really telling us anything decisive. Other times the market is telling us, hey, man, you better pay attention because I'm about to tell you a big message. We don't know what that is yet. I think the odds are the market's going to keep going down. But I think any time is a good time to join, frankly. But now it's like a really good time to join because there's so much going on in the market.
Yeah, it's definitely a weird time to be trading, but that's why you're there. That's why you help all the folks there, Mark. So shout out to you, man. Thanks a lot for being here. I'm going to stay here answering a couple questions if anybody has questions on the school, but I'll see you in the school, Mark.
All right, Rodrigo. Thank you so much, man. Appreciate it. And for everyone who's listening, thank you. And I would just say, just I don't think you have anything to lose. Just sign up for a trial, and if you like it, great. And if not, then then whatever, you move on. But I think the students, so far things are going really good, and I think people that want to learn really appreciate the class. People that want to just be told what to do, it's not really the good place for you. But if you want to learn, I look forward to seeing you in the class, hopefully tomorrow morning.
Great stuff there, Mark. All right, man. Well, I'll see you in the school. Thanks for being here with us for sure.
Okay, I'll talk tomorrow. Thanks, everyone. Have a good night.
All right, folks. And what you're looking at right now is the actual Benzinga School platform. So this is the video library. These are all the recordings. So if you do miss them, I know Doug was Babak from YouTube asking, we teach patterns. Yes, Mark will teach you patterns and a lot more. Let's see. All right. If anybody does have questions about the school, please post them in the chat. I'm just going to do a quick demo of this, and then we'll be shutting off the stream. So try to make sure you get your question. And if you do want to get an answer on it here. So video library, this is where all the video recordings are. If you click on the home page, basically you'll get a full view of what's coming up for the next week, right? Let's see. Today's Wednesday. Yeah, today's Wednesday. No, today's Tuesday. So Wednesday, you have the class of trends. Thursday, you have momentum. Friday, you have office hours. So you have all of these, the schedule set out. Investment psychology on Tuesday, that's my favorite. And whenever there is a live class, you just click live. It takes you literally straight to the live session. Right now, there is no live session because Mark is not doing the class right now. So, but when he is doing the class, this is where you're going to see the class. There's a chart here, and people are having fun there in the community. They're talking there, comments, feedback, live, things like that. So this is where you ask questions about the actual lesson. If you do want to share a trade idea and go back and forth with the folks there in the school, you have this chat room, right? It has 12 recent posts. It gives you the notifications. What I do here is that I click on that bell, right? And then it takes me right away. So this is questions for Mark. So basically, if you do have a question, someone was asking if you can email Mark. This is even better. You could chat with Mark here. So these are questions for Mark. If you have a question about it, you get it answered. And keep in mind, we do have a Q&A session every single class day. If you want Mark's trade ideas, you click on that chat. It takes you to all of his trade ideas, general discussions, class files. If you do want to quiz yourself, right here, if you do want to quiz yourself. So you'll have all of that set up. So we did the library, we did the homepage, we did the charts. This does come with Benzinga Pro. So you guys will get Pro with it. It has a bunch of features, a bunch of scanners, a bunch of things that you can customize. It really would take me like days to go over everything. So, but keep in mind, there's a 7-day money back guarantee. So if you do want to try it out, not just the school, but you will get access to Pro. As long as you have the school, you're going to have the Benzinga Pro. So let's just look at a chart here. I don't know. Let's look. We're looking at the QQQ. Jonathan Black asking, hey there, guys, what kind of laptop do you get for free if you sign up? So it is a Google Chromebook. It's free, free pretty much. Like, it's a courtesy item. So it's only for the people that join in this session. Now, keep in mind, there is a surprise gift, a surprise prize for those that join today, but you will not get it unless you email rodrigo@benzinga.com. Just let me know you joined. That's all I need to see. I'll put that email in the chat. If you do join, you make sure you email this email. Let Rodrigo know you signed up. That way you get the prize. Okay. All right. So in a nutshell, everything on Pro is on the left, just like the song says, to the left, to the left. So you got to look to the left here, right? You got a chart, screener, signal, scanner, movers tool, watch list, calendar, full of stuff there, economic, FDA, IPO, M&A, retail, SEC. You can find everything on there. Insiders tool, you can find all the insider trades. And even if there's multiple insider trades, ideas, this is a new thing. Basically, you can post your idea there. Details is what I have open here. Actually, no, I have the chart open here. I just put chart and it opens a chart. That's really all like if you're trading, I care about the price action, not much about everything else. So what else? You have a news feed that you can filter by keyword, categories. You can filter by market cap, price, volume, change in price, short float, like everything, literally everything that you want. I would end up just naming everything, but yeah, you can literally filter by almost anything there. You have the squawk radio. This is Charlie. Charlie's been doing this for quite some time. So basically it's like a live radio, but it's about like news, you could say, like things that are happening in the market. So he'll say, Ford announcing acquisition of, XYZ company, shares are spiking or shares are halted pending news, something like, I'm working, so I can't listen to it all day, but it's something like that. He's basically giving you trade ideas, you could say. Basically, it's like a news audio, right? But Charlie's basically giving you the selected news when stocks are moving. So if you do want to take advantage of that, that's great for scalpers, day traders, all that stuff. Let's see what else. If you do need help finding videos, all you got to do is click on the question mark at the top right. And that's it. There's a little red thing here jumping. I don't know what this is. It says, okay, so there's some features that they updated here. So definitely a big shout out to a couple folks that have helped on the back end coding side of these things. You have Bert, Vin, Neil, Sandeep. So shout out to all the folks there. So yeah, basically it's not like a set it, forget it. There's a lot of things that we keep adding. We already have a huge pipeline of tools that are going to be added to Pro, and some that are just going to be for the members of the trading school. So as a member of the trading school, you get all the perks with Pro. You get all the perks with the trading school, live sessions Monday to Friday with Mark, Q&A sessions, office hours, feedback on trades, call out trades, recordings are available for everybody, free laptop if you join. I don't know what more to give you guys. I'm empty-handed. I've given you the best deal possible out there. But if you have questions, just reach out. I'm going to leave the stream here running for a bit. I do have to get back here to a couple emails and some other work I have to do. So big shout out to everybody that was here. Shout out. Okay, quick question from Rise and Shine. Does it show what is trend? How do you have Rise? Okay, how long do you have access to the videos? Rise, you have access to them forever. So as an example, let's just say that you joined today, right? We're hoping you do. You'll get the free laptop and everything else I'm talking about, but you have all the recordings, and that's really what I have here, what I'm showing. So let's see. Q&A session. Remember I told you there's a Q&A session. Every session has a Q&A. See, levels, Q&A levels. Introduction and philosophy, Q&A for intro and philosophy. So everything is there, super easy to find. There's only like 6 buttons here that you really need. So I don't think much of you guys will have issues finding stuff. And let's see, yeah, you're welcome, Doug. No worries, man. Rise and shine, rise and shine. What's this question? How long do you, so yeah, rise and shine, questions for, you have recordings, you have the recording available as long as you have the school. So if you have the school, you join the school, you're basically going to have access to those sessions immediately. So I think that covers many of the questions here. There's a 7-day money back guarantee. And yes, it is the essential version of the Pro Rise and Shine. So basically you get all the, all the perks, all the features, live data, live feed, all that stuff, live radio, and anything else that we put out there, you're also entitled to. So, well, with that is within the plan, of course, right? And you're pretty much getting like top tier on that. So let's just look at something here really quick. So there's 141 people watching on YouTube. We can do 2 things, guys. We can either call it a day, right? We finish the webinar here, or I can show you a sneak peek of one of Mark's classes in the YouTube chat and in the Zoom chat. Let me know if you guys want to take a sneak peek of another class from Mark, or if we're good here and we can go ahead and wrap it up, folks. So I'll give you guys a couple seconds there to let me know in the chat. Let's see, we got a couple OGs here that are early here. Let's give some shout outs here. Abraham Coney, what's up, dude? Dave, Dennis, Dwight. What's going on, Dwight? FJ, George, Gerardo, Greg, Hannah, Helen, John, Jessica, Jonathan, Kate, Nestor, Steve. What's going on, Steve? Terry, how we doing, Terry? Great question, Jonathan. Is it a one-time payment thing for everything after, or do I sign up, or do I pay for anything else? So you won't have to pay anything else. Literally, the trading school has Benzinga Pro. It has Mark Putrino's chat room. It has the recordings, the sessions, all that stuff. So it's all in one. So yeah, it's a one-time payment for the year. Next year, it's not going to change. It's going to be the same price. A lot of places, well, you know what I mean? Like you'll basically, like whatever you pay today is what you'll pay at the renewal next year, and you will keep Pro. It's not like you're going to pay full price Pro and full price school, right? So everything will be the same price that you pay now. Hannah wants a sneak peek. So, all right, BG Bell wants a sneak peek. What class do y'all want to see? Let me know. 8 chapters. I'd be surprised if anybody remembers at least one chapter here. One chapter that you want to see. I'm not going to show you, and it cannot be levels because I'm showing you that one now. So yeah, Jonathan, pretty much it's a one-time payment for the year. I think if you do the math, like it's like 1,300 for the year. It's like $100 a month, something like that. So you're going to learn more than $100 a month value in a month. I promise you that. Let's see what we have, what else we have going on here. All right, let's see what we got here on the. We should have wrapped it up already, but I'm just staying a little longer for you guys. That's it. Video library. We're just gonna watch it for a little bit of time. We're not gonna spend hours here, nothing like that. How many hours worth Rise and Shine? I mean, we started in August. It's like 4 hours a day. Can't do the math, but it's a lot. It's a lot of hours. Months. I would say months back to back. I would say it's like 2, 3 months back to back, nonstop, watching video after video after video, something like that. So we have levels, introduction and philosophy, investment strategies and trading systems. And let me know which one you want to watch here. Which of these chapters? We'll watch a little sneak peek. Market principles, analysis, and sentiment. We have investment psychology. We have momentum, trends, levels. Okay, we went through the 8 chapters now. So if anybody does want to go through a specific chapter, let me know. Jonathan, trust me, well, there are people that trade Forex in the school. And yeah, I mean, it's Forex, the leverage there is pretty insane. I've heard some stuff about it. Rise and shine, you got your answer. It's how many hours per day? It's like 3 to 4 hours a day, rise and shine. Okay, all right, let's get to the lesson here. And if anybody has questions about the chat room, email, call me. I'm gonna go ahead and put a little session here for you guys. Let's see. Okay, investment psychology, because since it's my favorite one, and nobody gave me a chapter too. So, all right, let's give this a shot. Let me know. I'm gonna put it for a couple seconds. Let me know if you get the audio. Shout out to Douglas Sterner, Hannah Adedeji.
Alrighty.
Hey, whoa,
everybody.
Whoa. Chill out. Hold up, Mark.
Up and running here.
Let's pause Mark there for a bit. So shout out there to Hannah, Douglas. So you guys, thanks for emailing me. You guys are gonna have that price automatically. It'll be added, no worries. So shout out to the winners there of the prize. And you can win too. All you got to do is join. It's so simple, right? It's the easiest gift you're ever gonna get. Okay, let's get back to the session now, folks. And let's click play here.
Hope everyone had a nice long weekend. Ooh, we got some new people here. I'm sure I'm saying this wrong. Debanki Jatola. Morning. Hello, Skinny Dip and Bernie and Mike and Horstock. Trade for what? Jose. And then we got our early birds, Stan Adam, or Adams, ST Adams, Ben, Born to Be.
Okay, folks, give me a 1 in the chat if the audio is fine. Rise and shine, you can hear it? Cool stuff. Okay, so I'll just assume everybody else can. Let's go ahead and get on with the sneak peek.
Good morning. Cipriano, Sam, Workhorse. All right, so what's going on? Today we are going to talk about hello, Nance. Today we are going to talk about psychology, but we got a few minutes. So let's see. So what is going on over there in the Ukraine or Russia or whatever you want to call it? Well, let's see. I was looking at the natural gas market, which is this, and somehow I've lost all my lines. Huh. All right. Well, you guys remember we had that line at 480. I guess we could just put it right back in there. So despite all the news and everything about what's going on in Russia, right? If or Ukraine, whatever you want to call it. I mean, pretend you didn't watch the news. Okay? Pretend pretend you were like on an island and you could access your charts, but you couldn't access the news. Would you think that there was like a major crisis going on over there in Russia? Or what people say is a major crisis. I mean, do you see anything in the charts? I mean, you might have said, well, so if I just showed you this chart and said, where was the crisis? You'd probably say back here, maybe. I don't know. Here. But this is what's going on with natural gas today. It's like barely even moving. And I think it was kind of similar thing when we look at oil, because we were talking about oil, breaking this uptrend. Now, here's something that I was thinking about over the weekend. Ooh, Russia ETF. RSX. Thanks, Johnny. Gotta take a look at that. All right, what do you guys think of this? Right? I guess some people say it's a conspiracy theory. But as we all know, never mind these other guys. I think Putin is the richest man in the world because he basically literally owns Russia. And, we saw all of this significant selling here. So who knows? Maybe this is the Russians knowing that oil, is higher, or I wouldn't put it past them to create this. Oil gets this big spike up, and now maybe this is the government of Russia or Vladimir Putin. Because remember, oil is the biggest thing in their economy. Their economy runs on oil. I think oil needs to be at like $48 a barrel for the Russian economy to be balanced, and we crossed that level back in December of 20 or January of 21. I don't know. I mean, I don't usually do conspiracy theories, but I was just thinking that it was pretty odd that we had such significant selling in lieu of this crisis, right? So if this crisis abates, oil goes back down. We have a big move this morning. I don't know, just something I was thinking about. We can always get behind cool conspiracy theories that might be real, and I wouldn't put it past them. Yeah, I wouldn't want to be Vladimir Putin's broker. He messed something up.
All right, guys. So 5-minute sneak peek of the investment psychology class. Just wanted to show you guys a little bit. I'm going to go ahead and I'll leave the stream here running for you guys. I'll show you here the video library. But if you do want to join, keep in mind 7-day money back guarantee. If you don't like it, just get your money back. It's that simple. If it doesn't work for you, if it's not for you, you'll know. I mean, 7 days is more than enough for you to find out, especially if we have classes every single day. And the live trading session. I'm not the live trading, the chat room, the Benzinga Pro, all that stuff. So we have sessions as well to help you learn how to use Pro just for the trading school members. So with that said, folks, thanks for being here. We definitely appreciate all the love you guys show to Mark and myself here for, we put a lot of work here to bring you guys all these tools and these education things, all that stuff. So I'm glad all you guys enjoy it. So shout out to Roddy there, current Benzinga Trading School member. I see you, man. So yeah, guys, that wraps it up for today. I got nothing else. Stay safe out there, trade safe. And if you have questions about the school or anything, the Benzinga Trading School, that sort of stuff, just contact the number that we're putting on the chat. It's my email and my number, and more than happy to help you guys. So with that said, thanks a lot, folks, and we'll see you guys next time.